Hey everybody, Dave Mattis with RE/MAX of Reading and the Dave Mattis team, and I'm here today with another one of my quick hit videos. And today I wanted to talk about paying your mortgage off early, or getting the mortgage monkey off your back. About 34% of Americans own their homes free and clear. Well, that means all the rest of us are slowly chipping away at getting our mortgages paid off. And of course, you know, or maybe you don't know, but you can get mortgages from 10, 15, 20, 25 on up to 30 years. So I'm going to just talk to you about getting the mortgage monkey off your back and just give you a couple of ideas to help you, pay off your mortgage early, some things that you may not have considered. So the first thing, and you hear about this one a lot, and that is just doing a bi-weekly plan with the mortgage company that you have. Most mortgage companies allow you to make a payment every 2 weeks, and what that amounts to basically is one full payment every year. So you're definitely going to save. You're probably going to go from about 30 years down to 23 years using that method. So that's the bi-weekly payment plan. There's another one we call the matching principal payment plan, and that's just basically for your principal payment each month, just double that. And that, of course, will have very similar effect. Make an extra full payment per quarter is another idea. So, again, obviously you have to have extra money to be able to do all of these, but these are great ideas. And I will say that being in this business as long as I have, we typically go for the 30-year mortgage, and it's really just because people want the most manageable payment possible. But over and over and over, I hear people say, look, I'm going to take the 30-year, but I'm going to pay it off early. And I don't know that as many people actually take action on that as you would expect. So this is just to kind of encourage you to do that. So here's another thing that you can do, and that is if you come into some money, whether it's a bonus at work, whether it's something that you've inherited. If you win the lottery, you got to come to us and we'll sell you a bigger house. But if you win the lottery, or whatever, you can take that chunk of money and you can put it down on the mortgage as well. And again, you will be amazed how much time you shave off of a 30-year loan. Another option that people consider many times is refinancing to a 15-year loan. I know the people that follow Dave Ramsey. He strongly advocates for the 15-year loan. However, when you look at a 15-year loan payment, it sometimes sends you through the roof or over the top as far as your budget is concerned. But if you can do that, it will automatically shave a whole bunch of time off of your mortgage. One other thing that you can do, again, this is just to make sure that you're getting one extra payment in per year, and that would be just to divide your mortgage payment by 12, and each payment you send it in, you'll shave off a bunch of time that way as well. And last but not least, do what you can. If it's 25 bucks, $20, $50, $100, I would say any effort is well worth trying to get it done to get your mortgage paid off. So one other thing I wanted to mention to you, and that is when you're in the process of purchasing a home, and let's say you have another home that you are going to sell, but you have equity in that home, but you aren't going to sell it just yet, or you're going to sell it after you've purchased the next home, which does happen quite a bit, and that's actually a very good thing to do in this particular market. You can purchase the new home with a small down payment, let's say a 5% down conventional mortgage, and then when you sell the house that you have all the equity in, you are actually allowed with certain banks to take that money and put it down on the new mortgage, and the bank will do what's called a recast. Not all mortgage companies do this, but this is a pretty neat idea. And what a recast is essentially is for maybe a $250 fee, they will take the new balance on that loan and recalculate your payment. So this doesn't necessarily speak to paying off your mortgage early, but it does take care of the issue that you have where you're able to use this equity after the closing and plunk it down on the principal and then readjust your payment as though you had made that down payment initially. So I hope that makes sense. That's called a recast. But my opinion personally, I feel like it's a great idea to try to pay off your mortgage early, especially with the fact that, as most of you might have found this year with the new tax laws, that you weren't able to itemize with your mortgage interest the way that you were before. So any other information you need about this, we have a ton of great mortgage lenders that help us all the time. And of course, we know a lot about that as well. So please reach out, like the video, share the video, and if you have any questions, let us know. Thanks so much.